Hi, this is a video about how to apply the short-term rental loophole to a tax return using TurboTax. If you don't know what the short-term rental loophole is, I'd recommend Googling that or searching for other videos that will do a more thorough job of explaining what it is. So this is specifically just how to apply it when you're using TurboTax. The first thing to mention is that as far as I know, this only works on the desktop version of TurboTax. So that's the one that you install on a computer. If you're using TurboTax online, unfortunately, as far as I know, there isn't a way to apply the short-term rental loophole using TurboTax online. Okay, taking a look at TurboTax now, let's see how we do this. So we're going to go to the rental properties section. Actually, before I do that, I want to mention that the incorrect way to apply the short-term rental loophole would be to put it on Schedule C. Short-term rentals almost never go on Schedule C. The only exception would be if you offered something called substantial services, which would be if you did things like offered cleanings during guest stays, not just between stays, but during their stays, or maybe if it was more like an actual bed and breakfast where you serve them meals or provide entertainment. Those are the only kind of situations where a rental goes on Schedule C. So it's not correct to put short-term rentals on Schedule C. It has to go on Schedule E. In TurboTax, that means you don't go to the business section, you go to the rental properties section. Okay, so in the rental section, I have just an example rental that I set up. This one has quite a bit of negative income, and so I did that by having some expenses. So we have some real estate taxes, utilities, insurance. I just kind of made it so that in this case, including interest, just all the expenses add up to a loss in this case because the expenses are more than our income, which is only $12,000. What's happening on the tax return, if we go to the forms, is we will see that that loss from the rental isn't actually giving us any benefit on the tax return. So if we look at the 1040, so I gave this person $200,000 of W-2 income. The rental loss would typically show up down here. But in this case, we're not showing any rental loss. But if we go to the Schedule E, so we do have a loss because we only have $12,000 of income. We have all these expenses. It's working out to negative $26,000. So that's a loss for this rental property. What happens here is on this next line, the deductible rental real estate loss after limitation, if any, on Form 8582 is zero. So what's happening is Form 8582 is what applies the passive loss activity rules. And in this situation, we don't qualify to make use of this loss. And so we end up with zero here. And so it ends up that we end up with losses of zero. The losses get carried forward, but we don't get to use them this year. So what we want to do is use something like the short-term rental loophole to actually take advantage of this loss and apply it in the current year to offset our W-2 income. So the way you do that in TurboTax is, so you do have to be in this forms mode. So before we are in the step-by-step, but you have to be in the forms mode. We need to go to the Schedule E worksheet. So after the Schedule E, there's Schedule E worksheet, WKS. And this is where you can tell TurboTax to apply the short-term rental loophole. It doesn't show up in the step-by-step questions. So you have to be in this forms mode to access it. The box you need to check is here where it says check all that apply. We're going to select item G, which is other passive exceptions. When I click that, if you watch the balance at the top, so that's actually applying our rental loss now to the tax return. I do also want to check material participation here. So that's how you do it. So these two boxes, material participation and other passive exceptions. Okay, so I want to also actually go back and show a little bit more about what it's actually doing on the tax return when we choose these options. So if we turn off the other passive exceptions again to remove the short-term rental loophole, so what we're going to do is take a look at the 8582, page 1. And what we see here is that there is the loss from our Schedule E, this negative $26,000. But on this form further down, it takes a look at our amount of income. Because it's over $150,000 in this case, we don't qualify for the $25,000 exception, which is another way to have losses offset your income. So what we end up with is zero for the allowed losses. Total losses allowed is zero. So we end up then with this loss that can get carried forward. It gets carried forward on the form at the bottom of page 2. This is where the unallowed losses get allocated so that They can apply to future years, but at least in this year, we have 0 of allowed losses. So if we go back to the Schedule E worksheet, and we're going to turn back on that other passive exceptions. So if you watch over here, that 8582, it actually just disappears completely. So what it's actually doing in this case is it's basically just telling the tax software not to apply this loss to Form 8582. It just skips over the form completely and just doesn't go through the 8582 process. So if we go back to page 1 of the Schedule E, in this case, we have the same loss on line 21 that we had before, that negative 26,000. But we also have the negative 26,000 instead of the 0 that we had before. We now still have that negative 26,000 even after applying Form 8582, which in this case, it just doesn't apply at all. So that shows how to apply the short-term rental loophole in TurboTax. There is actually something else that you probably need to do because TurboTax is also not actually handling something else correctly if you have a short-term rental. So what we're going to do is go back to the step-by-step mode to make a change here. So let's take a look at the assets and depreciation that we have here. So let me go to my summary. So this is what I created as just this regular rental asset here. The way I created that is when you go to add an asset, the first choice is rental real estate property. So that's what most people go to. These other ones don't seem to apply. There's computers and video, tools and machinery, intangibles. So most people just go to this rental real estate property option. I'm going to get rid of that temporary one it just created, but when you do that, it creates one that is actually using the depreciation period that would apply to a long-term rental, but does not apply to a short-term rental. So I'll show you that by going to the forms mode. If we go to this depreciation report here, so what we can see is that it has 27.5 here as the life of the rental. So that does apply if it's a long-term rental, but if it's a short-term rental, even if you're not using the short-term rental loophole, actually, even if it's a average stay of less than 30 days, so not even just the 7 days that applies to the short-term rental loophole, but even as, it could even be a little bit longer term stay. But if the average stay is less than 30 days, then it should actually have a 39-year depreciation life and not 27.5. So this is something that almost nobody does correctly when they're using TurboTax, because when you walk through the software, it doesn't correctly let you know that you need to use a different depreciation period when you have a shorter term rental. So I'm going to show you how to actually apply that. So I'm going to go back to the step-by-step. And so if we go to edit this, so instead of rental real estate property, we actually have to go to this one at the end. It says intangibles and other property. So it's actually going to be this other property option. So what we have to do is we're going to go through all this. We're going to say other asset, and we're just going to use the name we have here, the cost, the date. So that's all just as it normally is. We're just going to skip over all this. Okay, this is where you choose the correct asset class. So technically under the tax code, it's considered non-residential real estate. So that's actually the option we have to choose. And for depreciation method, we're just going to use straight line. We're going to skip over this. We're going to have 179. This is the past depreciation. It's just showing a summary. We're going to go back to the forms and just make sure that it's showing the correct depreciation now. So go to depreciation report, and it's now showing 39.5 years, which is the correct life for a short-term rental. All right, I hope this video is helpful. I'm a tax professional specializing in taxes for rental real estate. There's a lot more to learn about how to correctly file your taxes for rental real estate and how to claim all of the tax benefits you're eligible for. I'll be posting more videos soon, so please subscribe. And for a ton more information about real estate taxes, visit my website, taxmodern.com, where I have an article series that goes through a ton of information about how to correctly file your taxes for rental real estate.